Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. Michael Burry just bought my Square block stock. What you must know before Square earnings. Michael Burry just bought my Square block stock in the last quarter of 2023, according to the latest 13F filing. Although he buys and sells stocks like a trader, his strategy isn't very complex. He tries to buy shares of unpopular companies when they look like roadkill and sells them when they have been polished up a bit. This really sounds like a used car dealer. All jokes aside, his weapon of choice is research. If he didn't do his research in 2005, he wouldn't be shorting the U.S. housing market for $1 billion gain in the end. In this video, I can't show you Dr. Burry's research, but I can show you mine and Square's macro research in this business cycle. It's critical for Dr. Burry to understand a company's value before spending a penny. He likes to follow Benjamin Graham, picking up deep value stocks. So Michael Burry finds out of favor industries, a particularly fertile ground for best of breed shares at steep discounts, like fintech in recent years. Square block stock and PayPal stock were the delighted outcome of the market throwing babies out with the bathwater. Even though Wall Street hates fintech stocks, calling them no moat with too much competition. But Michael Burry clearly disagrees. So how does Dr. Burry determine the discount? He usually focuses on free cash flow and enterprise value, which is market cap less cash plus debt. Last quarter, Block Incorporated put out massive $453 million in free cash flow. A huge pile of cash flowing in compared to their other quarters. He likes to screen through large numbers of companies by looking at the enterprise value to EBITDA ratio. Through that ratio, he is willing to look harder to determine a more specific price and value for a company. Block enterprise value to EBITDA ratio of 120 and EV to free cash flow ratio of 46. Block owns the Cash App, the #1 finance app in the US, and Square powers all the way we do business. Today's businesses are navigating transformative innovation and unprecedented change. They're facing heightened competition, staffing and operational challenges, and the rapid advancement of cutting-edge technology. Square partnered with Wakefield Research to survey consumers, restaurant owners, and retail owners in the United States, Canada, the United Kingdom, and Australia to uncover insights about the 2024 commerce landscape. Customers are seeking out new experiences and technology at local businesses. Facing inflation and higher costs, 43% of customers feel less optimistic about their financial situations than 12 months prior. In the face of financial uncertainty, customers are mindful of where they spend their money, seeking out businesses that offer value and efficiency. In 2024, customers not only expect businesses to incorporate technology, but may even prioritize spending at businesses using AI or automation that makes their experiences more seamless. 45% of retailers have seen greater employee retention and increased profits as a result of their automation investments. Well, 67% of restaurant owners say that automation tools have directly benefited customers, either through customer experience or communication. Restaurant operators face high startup costs, lingering inflation, wavering employment levels, and increased competition. When met with a challenge, however, restaurant owners are quick to adapt. Looking ahead, innovation and expansion are key. Many restaurant owners are experimenting with new goods and services, such as subscriptions, merchandise, and classes, and are using new technology and tools to get there. To help fuel that growth and stay competitive in a dynamic industry, restaurateurs are leaning into what their consumers want. Square for Retail provides alerts when stock gets low, provides automated inventory sell-through reports, and sends automatic purchase orders to vendors. Retailers can also use Square Payroll for full-service payroll, automated tax filings, and employee benefits, all in one place. We used to handwrite every order in our account book, so there were constant errors and inventory issues before we switched to Square. Now that we have a team and a reliable POS system, automation might seem impersonal on the surface, but in reality, it helps free up employees' time to focus on the tasks that matter most to the customers. As a result, automation solutions have had a big impact on retailers' bottom line. Retailers earning $500,000 or more a year believe in AI tools for product recommendations. By integrating generative AI into its powerful business software, Square gives retailers a seamless way to automate operations, speed up workflows, and regain time. Did you know retailers who report accepting a buy now, pay later payment option have increased 10% since 2022? With an average of 43% of retailers now accepting these payments. Retailers can increase conversion rates by providing an easy way for customers to pay in installments with Afterpay. Acceptance of buy now, pay later options is growing in popularity, particularly in the United Kingdom, 48%, and Australia, 47%, compared to a slightly lower 39% of retailers accepting them in the United States and Canada. To keep up with evolving customer preferences, retailers plan to focus on adopting faster and easier communication channels, offering more in-store events and shopping experiences, doubling down on loyalty programs, and accepting emerging payment methods. When it comes to emerging payments, buy now, pay later payment options like Afterpay and QR code payments are at the top of that list. It's essential for retailers to offer more choice at the checkout, especially as they look to capture next-gen consumers who are increasingly turning to BNPL solutions to enable them to budget and spread the cost of their purchases. Since adding Afterpay to the Square ecosystem of commerce tools, sellers can easily turn on BNPL capabilities to attract younger shoppers and drive incremental revenue to their businesses, all while managing these omni-channel orders on one platform. Consumers are feeling less financially optimistic. The majority of consumers are feeling less optimistic about their financial situation compared to 12 months ago. Just 28% of total consumers reported feeling more optimistic, while 43% reported feeling less optimistic. Sentiment about finances also differs across countries. Australian consumers feel less optimistic about their financial situations compared to other countries. 50% of Australian consumers feel less optimistic, while just 40% of Canadian consumers, 44% of UK consumers, and 37% of US consumers feel less optimistic. One thing that keeps the rates up and the economy going at this point, in my opinion, it's been severance.
You take that severance package and you leave Hooli immediately.
I didn't really do anything at Hooli, so...
Good, you're getting the hang of it already. This settlement offer is quite generous.
No, I know. I mean, $2 million is a lot of money.
2? No, it's 20 million?
I mean, talking to people in Silicon Valley, 6 months, 9 months, 12 months of severance pay. And people are asking, why are initial jobless claims so low? Because they're getting like 60% of $300,000, whatever their salary used to be. They're getting like 60% of that for 9 months. And you really think that they're going to go out and get, it's like $13,500 a year for California jobless benefits. It's a rounding error compared to what they're getting, but at some point that's going to run out. Google took a $2.1 billion charge in calendar year of 2023. That's a lot of severance and time for the economy to keep going. Companies are still paying people, so technically there's still an employee on the labor report number. It's incredible what you can use buy now, pay later for things that just vanish into thin air. Like a haircut. How is the lender going to get their money back? Wells Fargo ran an analysis that shows that buy now, pay later has growing at a third of the pace of credit card borrowing. So that's about $18 billion more in buy now, pay later. And everybody's like, I wonder why retail sales were so strong in December. I'm like, well, because that's the exact month that Walmart rolled out buy now, pay later. There's so many problems with buy now, pay later, and that debt not reporting on someone's credit report. You have to know how much they're paying. And then the fact that they're getting this out of register is not even a collateralized debt. I heard from a Gen Z that they were able to get a drink in a bar with buy now, pay later. I mean, how are the Afterpay going to get their money back if people with bad credit do this over and over again? I think this is the biggest risk with my Square Block stock. One thing that keeps me holding the stock is Block's balance sheet. They do have a lot of cash.
Bush upgrading Block, which is the old Square, upgrading to Outperform, a $90 price target. And then here is BTIG issuing a buy and then taking this upgrading buy, $85 price tag. Now, buried in the BTIG is this. Jack back at the helm of the Square ecosystem. Nearly 14 years after Jack Dorsey founded SQ, focused on enabling merchants with the ability to accept cards, he is back at the helm leading the segment. Now, this is very significant because a lot of people felt that he was just an absent CEO. If Jack is back, I'm with it.
Is his relative absence or the reason why you think it has not been able to respond?
Multiple firms have tried to bull it, and it hasn't moved. Now, the only time I've met Jack was when he explained to me the ecosystem, and he was very kind about it. That was delightful. And it was really game, set, match. I thought it was going to be the young person's Cash App, the way everyone was using it. I do not want to go against Jack Dorsey if it's a Jack Dorsey of that era, because, wow, he can be great.
If, in fact, he's giving it his full attention.
We got to get him on the show. I know you have a good relation. Maybe you try to get him on the show, because this is monumental.
He's been a little absent from television as well.
A little absent,
Yeah.
but you know what? It's never too late.
Yeah.
And I think that this is just a great sign. Even though I love their CFO, she does a terrific job, Jack being back tells me that this thing's going to get exciting again, and that's terrific.
But once those buy now, pay later debt beats default, the stock price is not going to stay high. And it's not high right now anyway.